Welcome back to another crypto video. Today we look at Sushiswap. What a brilliant project, amazing automated market maker. Sushi, decentralized exchange, market cap of $1.7 billion, trading at $9 on the dot right now. And we can see that we are up 21.9% over the 30 days, up 60% over the 14 days, up 17.5% over the 7 days. So it's pretty much downtrend resistant right now. It's looking really good. And let's hop in to some charts. Just want to say, if you are new here, please do subscribe to the channel. It means a lot to me. I'd love to see those numbers come up slowly. And if you wish to become a patron, as you can see, you've got Mub here supporting the channel. What a legend. Thank you so much, Mub. You can see that down in the description below with different benefits as per tier that you might want to go for. So let's check it out, shall we? So Sushi, the video we did on recently, we were talking about the ascending triangle pattern that we did have. We identified this $5 range as a key accumulation range. So if we do come back down to it, it could very well be a nice chance to actually buy some around there. But we usually spend a lot of days beyond it. So, 91 days over there. We also had over 100 days over there. And these supply zones, they don't really last long. Down in this lower price range, we were only there for 60 days. This time around, we were there for 18 days. So the opportunity is, it's very much a constraint time frame. But let's just really take a look. So we were targeting that $11.6 range, and we didn't quite get there. So if we hop into that 4 hour, we can see that the volume is dropping down. We didn't see any. Yeah, there was quite a bit of bearish divergence. I mean, look at the price keep coming up and the RSI is dipping away. So there was kind of a signal there as well. We've got that volume that is dropping away, and we do need to see a bit of volume in order to come back up. That would be very nice to see a bit of volume in order to tell us confidently that we can continue the trend to the upside. So nothing stays green forever, except traffic lights in England. I mean, so basically, you can see, this is the ascending triangle we had. Lots of noise, lots of resistance. We got this big blip to the upside. We actually came up to $10.07, but this wick here does signify that we got a lot of selling pressure. So we're back under that 20-day moving average on the 4 hour time frame, which is usually typically quite bearish when we do fall into that, below that 20-day moving average. It does usually mean that we have to then retest it in order to see that bullish momentum again, which is kind of a timely process, as it is a lagging indicator. You can see the same thing here on the 1 hour time frame that we are now seeing continuation to the downside. So what we can do is just kind of mark some areas of support where we think we could come back down to and actually see this bounce. So maybe we're still going to come a bit lower. Maybe we come to the $8.50 range before we do see the next sort of bounce to the upside. I don't see us coming towards $7.08, because even though we've got so much support written along here, as you can see with this high, this high, this high, this high, I think it's just unlikely that we're going to see $7.08 with all the momentum and that we just recently had. But it is possible, so don't rule it out. These could be DCA levels, so particular, buy zones. I would use all of these as DCA levels. If we come down, I would potentially buy a bit here, buy a bit here, buy a bit here, and that brings your average price down. And then when you do see the next swing high, you're riding profit and you're in profit. It's much better to DCA on the way down than to DCA on the way up. So this gives you all the upside potential. When you buy here, more downside potential. So it's good to DCA on the way down. So these are basically the bearish targets. And once we do break out of this resistance range, I think that's when we see us come through the $10.07 level, and that's when we start moving to the upside again around this 11.6 target. So we just got to see ourselves get back through this 10.6. Things were on track, but of course we're losing that support a bit right now. So be aware that we might come down in price. I haven't got a crystal ball, unfortunately. I can't see what will definitely happen, but these are the things that I'm looking out for. I mean, you've only got to zoom out on the daily, and you can see how strong, Sushi's looking. It really wants to come up to that particular 12-ish dollar level, which would be the 0.382 on the Fibonacci extension when we zoom it out. So we did get through the 9.3. as you can see, but we've come back below it. So really the goal is coming back through these Fibonacci extension levels, and when we get to like $12, then we'll be back in that really nice uptrend. It is worth noting that on the 20-day moving average here and in the daily, we are overextended. So it does still look typically good, but we've got a bit of space. There's quite a bit of space there, so maybe we will come down, slow down a bit. And it will sort of look like, if we come down, this comes along, we meet, we cross around there, around the 820 zone, and then we see continuation to the other side, as these are lagging indicators. So that would be fantastic to see. So if you like the video, do smash that subscribe button. It'd be great to see you in the next one. Hit the like button, and perhaps become a patron if you want to. If you want to support the journey, that'd be great. You get Discord benefits, exclusive giveaway opportunities, and also merchandise as well at discounted prices. So check that out if you want to become a patron. And thank you very much. See you in the next one.